Good day, my name is Dean Crocker and I'll be taking you through our latest EIA on Reinet Investments. On the 25th of January 2021, Reinet released its third quarter 21 net asset value update, and this was for the period ending 31 December 2020. The asset update reflected total adjusted NAV per share increasing by 5.45% relative to the second quarter, and it increased to 26 euros per share. The group funded commitments totaling 139 million euros during the period, a lot of which was funded through by BATS's GB dividends totaling 62 million euros. We then further looked at Reinet's ability as a surrogate for BTI. Reinet offers great asset class and sector diversification. It is underpinned by great cash generative assets, particularly that of BATS, which constitutes 36.65% of the underlying net asset value of Reinet. It also is offering a greater increase in exposure to the Pension Insurance Corporation Group, as well as the other listed investment Twist Bioscience Corporation in the United States, which has performed significantly well since their investment. Further, Reinet offers a great investment as a rand hedge, particularly given that all of the investments, or majority of the investments, sit offshore in a hard currency. The impact of the release: Reinet has outperformed the JC Cap Swix over a 3-year period. However, in a 12-month period, they have dismally underperformed the Swix by 36.1%. There is a strong correlation between Reinet's share price movement and that of BTI's, despite it only contributing 36% to the underlying NAV. This also results in a larger discount to its net asset value. However, we do suspect that will in the future start to narrow, given that the Pension Insurance Corporation becomes greater weighting in the underlying assets. So the assessment: Reinet trades at a 40% discount to our sum of total parts calculation, which totals 48 Rand and 4 cents effectively. It is, however, trading at a 40% discount relative to its historical discount of 35%. If you look at the table as illustrated, you can see that we have valued the BATS contribution on market value at 174 Rand, whilst Pension Insurance Corp Group has actually outperformed that, and we now value that at 248 Rand. Those are by far the greatest investments that Reinet have made, whilst the other investments really just offer greater diversification, but are not really meaningful to the greater business. If, however, we exclude BATS from the total calculation, you see that the share, or the NAV, trades at roughly around about 309 Rand, relative to the current market price of 291, implying that there's a 6% discount to net asset value if we excluded BATS. We thus can assume that BATS is effectively free in the valuation. If you look at a total valuation, however, it is a 40% discount. Further on the assessment, and this just nicely provides a breakdown as to the underlying constitution of the NAV, and you can see that the Pension Insurance Corp has actually started growing quite nicely. You now have a nice diversification between BATS and PICG, with the other investments remaining relatively consistent around about the 20% mark. What is good is that PICG is showing very strong momentum and favorable results. There is still a positive assessment on BATS, and we do feel that they are undervalued, and you're welcome to look at our latest BATS EIA for further details there. And the holding company discount does seem to be reverting back to its longer term average, which is of 35%. It is still quite significant, and unfortunately this is what we've seen across a lot of the holding companies, is that discount remains quite sizable in nature. We, based on all the information at hand, remain and continue to maintain our overweight portfolio positioning in Reinet, and offer it as a nice substitution to BATS. Should you wish to place a trade, you're welcome to speak to either your financial advisor or contact the trading desk. And as a final note, just please take note of the disclaimer. Thank you very much.